Okay, in this video, we will discuss about depreciation. So, what do you mean by depreciation? Let us take an example. Suppose you have bought a new vehicle. Okay, so you know that initially you are bought it for a particular value. After each year, if you want to sell that vehicle, its value depreciates, is coming down, and that exactly is called depreciation. And for a company's perspective, also, depreciation is very important, and we will see why in this video. Okay, let us look at the definition of depreciation. So, depreciation is the loss in value of a property due to wear, tear, and deterioration. Okay, so these are the factors. So, depreciation is mainly of two types. First one is the internal depreciation, that is occurs due to certain inherent normal causes like wear and tear. Okay, just like the case of the vehicle, it has got wear and tear with use. It reduces its life, its performance will be reduced, and maintenance will be increased, and reduced demand, technical progress, etc. For each year, at the end of 15 year of a vehicle, the technical technology will be completely changed. Sometimes new vehicles will be introduced with a better technology. So that all causes the reduction in the value of the product. So that is called depreciation. And external depreciation is due to some external reasons like obsolescence and accidents. Okay, we will see that in detail. So let us look at the causes of depreciation. First one is wear and tear. So the change in shape of an asset due to use in the business is called wear and tear. Okay, you can take the example of a car. So it has got wear and tear in due to its use. Okay, that causes a decrease in value. And if you take any other machine, it has got wear and tear. After each year, its value depreciates or reduces. Okay, and obsolescence, the decrease in the value of an asset due to new invention, okay, change in the habit and taste of people, okay, and improvement and change in technology and fashion is known as obsolescence. For example, take the case of a car, of a IC engine car. Now, what will be its value after 10 years? Suppose we have new EV cars. So that is a technological change that can impact the value of these IC engine car. People may not use this IC engine car anymore. Suppose a new invention has been introduced such that its mileage is increased by maybe 1.5 times. So that also causes, because that is a technological change, and that causes, that reduces the value of the product. So that is called obsolescence. Okay, it is not due to wear and tear. And exhaustion. So this is another cause. So asset may lose its value because of exhaustion too. This is the case with wasting assets like mines, quarries, oil well, etc. And account of continuous exhaustion, a stage will come where mines and oil wells that completely exhaust. A perfect example is in India, we have the Kolar mines. Okay, its value depreciates because it is exhausted. As more and more we mine from that quarry or a mine, its value gets depreciated. So it becomes more and more difficult to extract this gold or oil from that mine. That causes a reduction in its value, and that is called depreciation due to exhaustion. So there are three main reasons: wear and tear, obsolescence, exhaustion, etc. Now, there is another terminology we commonly use in depreciation, that is salvage value. It is an estimate of the asset's value at the end of useful value. For example, you have bought it for some maybe 10 lakhs. So maybe after 10 years, what is its value? Sometimes it can be sold at a value of 1 lakh. Okay, and that is called the salvage value. And now let us discuss about the objective of depreciation. So why we include depreciation? So this is to reflect reduction in the book value of asset due to obsolescence or wear and tear. Okay, so that means for a company, when they buy a machine, it has got a book value. So after each year, the book value gets reduced. Okay, so helps to compare the amount of expenditure over a fixed period to revenue received from the asset. For example, we have bought it for 10 lakh, that machine. So after 1 year, you have got 2 lakh. After 3 years, you have got 1 lakh, like that. You can calculate the amount of revenue earned by that machine compared to the amount of expenditure of a over a fixed period. For example, each year for maybe for maintenance, you need to put in some maybe some 20,000, etc. For example, take the case of a vehicle. So each year the maintenance increases. You need to spend more and more money for each maintenance. Okay, and then we can reduce the taxable income. This is one of the main objective of depreciation, by changing the amount of depreciation against the company's total income. So that means you can reduce the taxable income by accounting for the depreciation, right? So that is one of the main objective of the depreciation. So in the next lecture, we will discuss about the methods of depreciation in detail.